The biggest fear that most homebuyers have when it comes to buying a home in 2026 isn't the monthly payment. It's not the interest rate. It just comes down to one simple question. Do I even qualify? But here's what most lenders will not tell you. The pre-approval process, if you go about it the wrong way, will actually destroy or severely hurt your chances of getting approved for a mortgage. It'll limit your buying power because most lenders, sadly, are going about this all wrong. And it's because of that word, lending. They consider themselves just a lender, which is nothing more than a transactional person who's giving you money in exchange for your information so that you can go out and buy a house. There's no strategy behind it. There's no big picture thinking. It's kind of a simple intake process. Now, I, as a mortgage advisor, go about things very differently. I'm Arjun Dhingra. I'm a 24-year vet of the mortgage industry right here in the San Francisco Bay Area. I've helped thousands of families and individuals put down roots in this market or buy investment property or both in building their real estate portfolio over time. We're very strategic and outside the box, and if me and my team can be of help to you in any way, shape, or form, whether it's putting together a long-term strategy or getting into this market right now, then we'd love to talk with you and have the privilege of helping. So please reach out to me on Instagram at Arjun Mortgage, and I will get back to you and we'll set up a time to talk. Now let's get into today's topic. So today I want to get into it with you on how to actually go about the right way of getting approved in 2026 and the strategy that's involved, so that you can make a much smarter decision when it comes to entering this market. So for starters, I'm going to talk to you about where most all other lenders get it wrong. Now, guys, here's the news flash. You don't need a lender to do your mortgage. You can do it on your own. There are websites now and AI-powered mortgage banks that'll literally run you through the entire mortgage process just on your own. You'll have a simple bot that's walking you through, and it's kind of like applying for a credit card. You just enter in your information and you'll get approved for a line of credit, or in this case, a mortgage approval amount. You'll get to print out that letter. You can give it to a real estate professional and say, I'm good to shop for homes at X price. And then you go out there and you shop. But this is the single biggest indebtedness that you will probably take on in your lifetime. For most Americans, it is. And if you're gonna take out hundreds of thousands of dollars or even millions of dollars in debt, shouldn't you have some advice and guidance around it? Or should you just apply for it like it's $1,000 credit card? Now, you know where I stand with this, but this is my biggest gripe with our industry. We don't have enough mortgage advisement. We just have lending guidelines and lending talk. So let me get into what true advisement actually sounds like. The first thing that I talk to you about, and we're gonna treat this kind of like you're actually on the phone with me or my team. Let's just imagine that this is a Zoom. I'm not gonna ask you about paperwork. I'm not gonna ask you about your income. I'm not gonna ask you about your credit score at all right now. And I know that seems a little counterintuitive, or maybe even a bit of like a head scratcher, because every other lender you've talked to jumped right into that intake form. They wanted to fill out all the blanks, check the boxes, and get back to you with a number. But I actually put all that aside. I look right at you and I ask you one important question. Why do you want to buy real estate? Now, this is important for a few reasons. I need to understand what your true motivations are, because look, buying a house is not an easy thing. And depending on the market you're in, it can get really competitive and turn into a bit of a slugfest out there. And the reason why I need to understand why it is that you're actually doing this is because we're gonna need to tap into that why at points when it becomes very difficult, or that this starts to become a little bit straining, or your confidence is starting to get shaky in your ability to ever get through. And remembering what that why is and what the true motivation for why it is that you're wanting to do this is what we will come back to, which is gonna re-energize us and re-engage us in staying focused to finish the fight. Might sound a little bit dramatic, but trust me, right here in the San Francisco Bay Area, that's the kind of mindset that it takes. So I ask people, why do you wanna buy? Are you being evicted or being forced to? Are you doing it because you saw all your other friends doing it? Now, this was a common answer during the COVID market because so many people bandwagoned on buying real estate because they saw all their friends leaving cities, moving to the suburbs, buying houses with yards and home gyms. But you know what else people did a lot of during the pandemic in a bandwagon effect? They bought toilet paper. Stupid. So asking what those motivations are of why it is you want to buy, are you getting a gift down payment, or your parents actually wanting you to do this, was it a wedding gift? And figuring that out, because buying a home is a lot of responsibility. So I want to know why it is you want to do it, what that real motivation is, because that will help lead us into the next question. So remember, this why is something bigger. Is this about stability? Is it about family planning? Is it about wealth creation? Is it about building a portfolio, lifestyle, optionality? If I don't understand your why, or more importantly, you don't understand your why, you will make emotional decisions when it comes to buying, and those end up being the most expensive. The next question I am going to ask you, we're gonna zoom out, and I wanna talk big picture here. I wanna talk about your life and where you see things going. Now, nobody has a crystal ball. but everyone has an idea or a plan of where they envision themselves heading towards. So I'm asking you, my friend that is a buyer, where do you want to be 5 to 7 years from now? How about 10 years? Where do you envision your career is taking you? What are the employment prospects of you staying where you're at, staying employed? Are we headed towards any sort of turbulence when it comes to the economy and your job might be at risk? Or are you pretty safe and secure where you're at? Are there any exit plans or liquidity events that could be coming up here down the future depending on the company that you work for? Are you looking to have kids anytime soon? Are you gonna outgrow this place quicker than you move into it? This is really important because when I help you come up with a mortgage strategy, not just a mortgage loan, but a mortgage strategy, which is far more impactful, we have to understand that the right loan today might be the wrong long-term loan. Because buying a home is not an actual moment, guys, it's a chapter. So that's why I have to take a big step back, review these answers that you give me during this conversation, and then help us arrive at a mortgage strategy that's in a trajectory instead of a singular space. Now I'm gonna ask you perhaps one of the most important questions, because most people have not admitted this part out loud, and that is, what are you most afraid of in this process or in this journey that we're about to embark on? Is it losing your job or that you won't be able to afford this mortgage at some point? Are you in a shaky relationship, at which point I'm gonna advise you, you guys should not buy this place together until you're on solid footing? Are you worried about overextending yourself? Are you worried about a massive correction in the market, losing your down payment, having this turn into the worst investment of your life? This fear, and everyone has something, it's just that this question never gets asked. But I like asking it because I need to understand what those trigger points are gonna be. Again, for when the transaction gets a little bit tough, or we hit some challenging moments in this process. But also, if I understand the fear, then I know how we need to work around it, or where I need to shore up some education and information for you so that we can reconcile those fears. Because I firmly believe in this asset class. I know of its power and how it changes the financial trajectory of an individual or a family, and how a owner is 40% more well off financially than someone who stays renting for the rest of their life. It's indisputable. And this is the best asset class there is. I'm not saying it's the only asset class. Trust me, I love stocks, I love cryptocurrency, I even from time to time love to gamble. But nothing has outperformed real estate over the history of this country's economy. And I wanna make sure you take full advantage of that. So ignoring this fear is important for us not to do, because it just means that it shows up at the wrong time in the future, and likely when the stakes are even higher. So let's get to the bottom of that part. Now, by the way, guys, before I get into us getting into the X's and O's of this process, I want you to know that I'm licensed in over 40 states. We are well connected to professionals and insiders in all of these markets. So if we can be of help to you, if it's something outside the Bay Area, but more on a national level, just remember that we can be of help here. So let's get into the X's and O's, because after we've talked about these more challenging or broader or deeper questions and had those conversations, and trust me, during that process, we really get to know one another at that time. And you will know that I'm going to be very different from any other mortgage person you might have worked with. And again, this comes back to the fact that I operate and am an actual mortgage advisor, not just a mortgage lender or a broker. So now we try and figure out what the budget is. The reality, not the fantasy. I want to look at where your money is actually going right now. What do you guys spend on versus what do you think you actually spend? And then from there, let's figure out how much is going to be carved out for a housing expense. And I want to do this comfortably, not in a maxed out state, but something that's comfortable, because there's nothing worse than buying a house and having buyer's remorse because you're house poor, meaning you have no cash left over to do anything with. You're just pretty much a slave to that mortgage. You can't go out to eat or enjoy multiple nights out, a couple of happy hours here and there, or even take a vacation once a quarter like you were accustomed to doing when renting. So if it's gonna really alter your lifestyle significantly, because trust me, there's a sacrifice, of course, I get that, then it may not be worth it, or we need to adjust our budget. Then we're gonna do a credit review, not just looking at your score, but I wanna look at the credit mix, how you handle credit. Are you in a position to where you could take on this new indebtedness, which again is probably going to be the largest one that you have, and will it fit responsibly or in harmony with everything else that you make payments on? Also, if there's been any recent changes or if there's any blemishes on your report, we can help you fix that so we put you in position to qualify in better standing in the future versus right now. Next, we're gonna take a very close look at your employment and your income outlook. Now, this is not just what you make today, but I wanna look at the stability of where it is you work, what the industry risk is, if there's any other variable income or side hustles that you have. If you're self-employed, what are the trends within your space? Because let's face it, if you're working in a space right now that, let's just say for example, is about to be completely upended by AI and you don't feel very good about your prospects, then this may not be the best time to buy, because the last thing you want is a very expensive mortgage and no income coming in the door. So not only is this important on a personal finance level, it's also really important, guys, because we are in a tightening underwriting environment. What I mean by that is that banks look very closely, and rightfully so, at mortgages and the people that are applying for those mortgages to make sure that you thoroughly qualify, not just barely get by, or in some cases even underqualify. Next, we're gonna talk about the down payment strategy. Now, if you've seen other videos that I've talked about, the biggest myth that's out there, and it comes sadly from our parents' generation or your rich uncle, is that you must have a large down payment, whether it's 20% or 25%. There's even some people out there that think you shouldn't even have a mortgage and you should pay all cash for a home. Now, I believe that this is one of the variable areas that really unlocks wealth because it opens up so many options. You don't have to put down a large down payment, and that's why down payment strategy is important. I'm gonna ask you, is it more important for us to qualify for this home or for you to end up with this mortgage with the cheapest possible monthly payment, or do you wanna preserve some cash and not necessarily have to sell all that stock or borrow that money from mom and dad, but use what you have to be able to qualify for a mortgage, even if it's a higher payment right now, because you know long-term you're gonna be in a better position. So we talk about that very thing, guys. The overall down payment, if there's gift funds that are going to tie into this, family help, co-signers, what the liquidity is gonna be like after closing. It's not about hitting a magic number. It's about buying without becoming house poor and using the right strategies so that you can enter this market, if you so want to, right now, as opposed to having to wait. Recently, I did a video on the missed opportunity cost of waiting to buy versus buying right now. And the numbers can be pretty staggering, even with lower interest rates. So once we have all of this aligned, guys, we get into what is called an actual approval. And we pre-underwrite you, which means you have what I refer to in this mortgage game as the loaded gun. When you have a loaded gun, which means you've been fully underwritten, you have a bulletproof approval, and nothing changes with your financial or employment situation or your marital status, if you're doing this as a couple, that if you find a property you want to jump on, you can do so and close not only with confidence, but with speed. And in this market, speed kills in a good way. So we make sure that you look really good and solid on paper. The agent that you're working with and helping you find that home can trust it. The selling side that you're gonna make this offer to and they're going to see you front and center as an eligible buyer is going to respect it. And underwriters stand behind what they said they were gonna do for you. This is exactly what wins deals in a competitive market. Now, the last piece that I'm gonna talk to you about is something that a lot of buyers underestimate, and that is the team. In recent years, it's been dismissed or people have overlooked the fact that you need A-level professionals to be working for you because there's been a huge rise or uptick in people opting for cheaper services. Now, whether this was in the wake of the NAR lawsuit or it was well before, people have long thought that real estate agents, mistakenly, are overpaid and that dealing with one actually makes the process more expensive and that you don't actually need one. You can work with either a discount broker or, better yet, do this yourself. And sure, it could be cheaper, but does it mean that it's gonna have a favorable outcome? I always go back to how I refer to my services or what working with a good mortgage advisor is versus some type of discount, cheap, bottom-of-the-barrel mortgage broker. If you were uninsured and were given 3 cardiac surgeon's business cards from your general physician that said you're going to need open heart surgery, when you call to each one of those surgeons, are you going to make the selection based on the cheapest option? No, of course you wouldn't, because this is your life. Now, I get it. This is not life or death here, but when we're talking about the largest indebtedness that you're going to take on, I think it matters some. And going the cheaper route is certainly not going to help you. You want to make sure you wake up in that recovery room when the anesthesia wears off. You want to make sure that your heart is fully repaired and you're not going to be back in there doing this again a year from now. So very important that you understand that, which is why working with A-level players is actually going to be cheaper for you in the long run, because there's no price tag you can put on losing out on a house, or in the medical analogy, not waking up. So a top tier agent in the market that you're working in, now this is someone who's well connected, established, years of experience, has the respect of the marketplace so that when they walk into a room or they put down an offer, it's going to be reviewed, it's going to command attention. And working with a top level mortgage advisor. Now, this is what my team does. And this can be the difference between winning or losing. Amateur hour is over in this market, guys. This is a serious market for serious players, which means you need to have a serious A-level team. But a strong mortgage advisor and a top-tier agent can absolutely change outcomes. It'll be the difference between winning out on that home and losing it. Bad teams kill deals. Good teams create leverage and opportunity. And your approval at the end of the day, guys, is only as strong as the people representing you. So getting approved, guys, in 2026 is not just about speed. It's not about rushing through this process. It's about clarity. And it's about people, and it's about the right conversations with those people. Again, clarity on why you're buying, what the motivations are, what you're afraid of in this entire process, where you're going, what you can truly afford. and what the big picture looks like. Is this just a stepping stone? Are you using this as a way to create more wealth, more leverage? Or sadly, are you doing this for all the wrong reasons? In which case, I'm gonna help you figure that out and actually talk you out of getting into this. And trust me, I've done that plenty of times in recent years with no regrets. Just because home ownership is accessible to anyone who wants to pursue it does not mean that everybody should do it. And don't get me wrong, guys, there are a lot of people who are in a constant, perpetual state of remaining renters, and they're doing well financially because they have the discipline to invest into other asset classes. Or maybe they invest in real estate but continue renting themselves. There's lots of ways to go about it. But if you want help doing this right now the right way and not in a rushed way, again, please reach out to me and my team. We'd be honored to help you put together a strategy for right now or something later in this year. Thank you guys for watching this video. I hope you found it useful. Please make sure that you subscribe to this channel, like this video, feel free to share it with other people. And again, reach out to me anytime if I can answer questions or talk through certain concepts here or even debate these things. Thanks for watching, guys. We'll see you guys on the next video.